So hi friends, so today we are going to understand the profit and loss statement of the company. Profit and loss statement is also called as the P&L of the company in short, and sometimes also called as the net income statement of the company. So this profit and loss statement is one aspect of accounting, and as we know, accounting is the language of investing, my favorite subject by the way. And within accounting there are other aspects, like you need to understand even the balance sheet of the company. We need to understand how to read the cash flow statements of the company. So before we come into balance sheet and cash flow statement, let us first understand the first important accounting statement, that is a profit and loss statement. So the profit and loss statement is a summarization of what the company earns in terms of revenue and what the company incurs in terms of expenses. Finally, after deducting the expense from the revenue, you get to know whether the company is in profit or whether the company is in loss. Revenue is more than expenses, it's a profit. If revenue is less than expenses, it's a loss, of course. So now let us understand what is the time period for which this profit and loss statement is usually derived for any public listed company. This time period is also called as the accounting period of the company. And this typically starts from 1st of April of the year to 31st of March of the subsequent year. So now this time period typically ranges from 3 months, 6 months, 9 months to a year. And beyond a year as well, it can go to 15 months and sometimes even to 18 months. It's extendable to 18 months upon certain approvals from the regulatory bodies. So now that we have know what is profit and loss statement and what the time duration, let us see what consists within the profit and loss statement. The first most important element within the profit and loss statement is the revenue aspect. So the revenue has two parts, that is the core revenue, and second aspect is the non-core revenue. Now the core revenue is basically what the company earns as a result of selling its main products in the market. For example, if we take Colgate-Palmolive, it sells toothpaste and toothbrushes. So as a result of selling these core products, whatever money or capital it gets as a result of selling this product, that is called as the core revenue of the company. Now coming to the second aspect of revenue, that is the non-core revenue of the company. So now this non-core revenue is typically what the company earns over and above the core operation. Now what can it earn over and above its core operation, by the way? For whatever profit the company might have earned, it might invest into certain real estate for which it can get rental income. It could have bought certain marketable securities. It could buy certain shares of a company for which it is earning dividends. It could also be it has given loans to certain companies for which it's earning interest. So all these aspects are part of the non-core operations of the company. So now that we have seen the two aspects of revenue, let us see at the aspect of expenses. Now typically when you open a profit and loss statement of a company, you will see that the expense portion is huge. So let us go one by one to the expense portion. The first aspect of expense is the cost of raw materials. So whatever the company needs to buy to make its final good, that is what the company expenses towards the cost of raw materials. So all this cost towards buying raw materials is catered under cost of raw materials or cost of goods sold as well. So now this is the major portion. The second aspect is towards selling, general and administration cost. This aspect of cost typically has advertisement cost, it has copyright cost, it has employee cost, it has certain back-end labor which it needs to expense. For example, nowadays company has a lot of IT infrastructure. Now this IT infrastructure it needs to pay. So this expense is also catered under selling, general and administration cost. So now that we know the second aspect of expense, let us look at to our third aspect of expense, that is our depreciation and amortization. So when we say about depreciation is typically for fixed assets. So these are basically physical in nature. It may be property, plants, equipment, computer equipment, by the way. So these fixed assets have a useful period of life. They don't cater only for 1 year. They produce value for multiple years for the company. And because it caters its value towards multiple years of the company, we can't deduct its cost in a single year. It needs to be distributed for subsequent years. Now, for example, if I purchase a laptop for my company, Colgate-Palmolive, and the laptop cost me around like 1 lakh rupees, right? And I say that the useful period of the laptop is 5 years. So I now divide 1 lakh by 5 and I get 20,000 every year. So this 20,000 I depreciate from my revenue as part of depreciation and amortization expense. Now after depreciation, next comes the amortization, as the line item says. So amortization is for intangible assets. So depreciation, as I repeat, it is for tangible assets or physical, and amortization is for intangible assets which are non-physical in nature. It could be certain trademarks or copyrights for which the company needs to buy so that it can sell its product. It needs to create a niche of its product. It needs to have a specific logo or a song which triggers the mind of a consumer to buy its product. So the cost incurred towards buying these certain trademarks or copyright is called as cost towards amortization. And this cost is divided over a period of time, over a useful period of time that is decided by the company itself. And we can see in the notes section of the profit and loss statement what is the duration for which the intangible asset is useful. So this is all considered as part of the amortization cost. So next, our fourth aspect of cost is the finance cost. Now for a company to start itself, it needs to raise loans, raise capital. So from where will it get loans? It needs to approach the bank and raise the loan for itself. And now because it has taken loan, it needs to pay interest. Now this interest is paid every year. So the interest portion of the expense is considered as part of the finance cost within the expense portion of the company. So now that we have understood the aspects of expenses, let us look at our last aspect of expense, that is towards changes in inventory or working capital. Now as we know that the company makes products in the current year, and certain products it may not able to sell in that particular year. So now it has inventory remaining to be sold in the subsequent year. So the expense incurred towards this product, which could not be considered in the previous year, it needs to be considered in the subsequent year. So this is the cost incurred towards changes in inventory and working capital expenses as well. There's a certain things where the company might have invested its capital, but it's work in progress. It has not completely finished, and because it's not completely finished, it's not able to give value in that particular year. So that value is considered, the cost which has been spent towards creating that value is considered in the subsequent year. So this aspect of expense is the changes in inventory and working capital in progress expense. So after we deduct all these expenses from the revenue, what we get is the profit before tax. So as you all guessed it, the next expense is the tax. So once we deduct tax, we get what is called as the profit after tax. Now this final profit, whatever we get after tax, is the net income of the company. Now this net income, if we divide it by the total number of shares of the company, we get the EPS of the company, earning per share of the company. So then we finally know what our share of profit is depending on the number of shares we have bought of the particular company. So that was it about profit and loss statement. I hope you have understood. In case you have certain doubts or certain things which you weren't able to understand or I wasn't clear about, please put down in the comment section or drop me an email. I'll be glad to get back to you in my next video so that it helps everybody who might be having the similar comment or question. So please subscribe to this video. I'll be sharing subsequent videos about the different ratios of the profit and loss statement and what are the key ratios which can help you analyze the health of the company. And subsequently we will also take up an illustration. We will see a typical annual report. We will go to the profit and loss statement. Every line item we will analyze and then also calculate the different ratios to analyze the health of that particular company in the current financial year itself. So please subscribe and keep watching the videos so that you can gain immensely from all the videos which I'm going to come up in subsequent weeks. See you. Bye.